Today, I'd like to welcome Gary Milkwick. He's our Chief Product Officer here at 1-800-Accountant. Gary, it's nice to be with you for today and the next couple of Wednesdays.
Thanks, Travis. Nice to be with you as well.
Today, we're talking about cryptocurrency. Something that's it's not so much that's new this year, but it's new to a lot of people this year. There are a lot of people may have begun dabbling in this without any consideration for the end of year tax implications. What what sort of things could people be doing here at the end of the year? If this might be their first year dabbling with it, what kind of thing could they be looking at doing before the end of the year?
Yeah, so there's quite a bit. It's kind of a confusing area. It's gotten a lot more traction lately as the market cap of total cryptocurrency out there continues to increase. I think now the value of cryptocurrency total is over $2.5 trillion. So it's not, back 5 7 years ago, people would say, oh, it's just a fad, and I don't see how anything is a fad with a 2.5 trillion, not billion, million, $1 trillion
Right.
market cap. So it's something that a lot more, we see a lot more of our clients interested in it. We see, I'm sure a lot of the people that are watching today have friends and family that are doing it if they're not doing it themselves. And so it's a big issue now, and there's some really peculiar things about it, that if you're just starting out, you may not know. So the first thing is, when you buy cryptocurrency, that in itself is not a taxable event. You're exchanging cash for Bitcoin or Ethereum or whatever token you're purchasing. But when you use that, so let's say you purchase something with a Bitcoin or Ethereum, when you purchase that item, that creates a taxable event. And what does that mean? Well, the IRS has defined cryptocurrency or lumped it into the category of being a capital asset. So basically, it's like, it's probably easiest to think of it as if you're buying and selling a stock. So, for example, if you bought, 100 shares of Microsoft at, $100 a share and then sold it, a year later for $120 a share, then you'd have a gain of $20 per share times 100. So that would be your gain. So with cryptocurrency, it's pretty much the same thing. You have your cost going in when you purchased it. When you utilize the Bitcoin or Ethereum or whatever cryptocurrency you're using, then you have to take the value at that date, at that point in time, and determine what the gain is between that point in time and when you purchased it. It's easier if you're just selling it. That makes sense to people. Okay, I'm going to sell. I'm selling an asset. I purchased it at X value. I purchased Bitcoin at 50,000 and I sold it at 60,000. If I had one Bitcoin, that's a gain of 10,000. That's easy. But if I purchased one Bitcoin at 50,000 and then I bought, something for zero point 0.3 Bitcoin on 3 weeks later, and then I bought something else with Bitcoin, a year later, then you have a mix of short and long-term capital gains. Now, short-term capital gains are less than a year, and those are taxed at ordinary income rates. So whatever your ordinary tax rate is, that's, if you used it less than a year after purchasing it, you're going to be subject to ordinary income tax rates if it went down, if it went up. If it went down, that's going to be a loss that you can offset against other capital gains. If it's been more than a year since you purchased it, the advantage is that the gain you make there is subject to long-term capital gains, which are 15. It can be as low as 0%, but for most people are going to be 15%, and for upper income people, it's going to be 20%. So that's the overall idea of how the taxation works. Now, sorry, I was giving some background information to make my way over to your question of what can you do before the end of the year. One important difference between cryptocurrency and stocks is that at the end of the year, what people used to do with stocks is they would say, okay, I have some gains that I've made over the years, over the course of the year, and I have some stocks that are down, so I'm going to sell those, recognize the loss, and then immediately buy it back. Now, that was stopped. That practice was stopped under the wash sale rules. So if you sell something and then buy it within 30 days to prevent that just kind of artificially locking in a loss,
Mm-hmm.
For stocks, that's disallowed. You can't do that. But there's nothing saying that cryptocurrency can't do that. So, when I'm talking to a client who's bought a lot of cryptocurrency, I'll go through and say, okay, what are your gains for the year? Do you have some gains? Okay, do you have anything that would potentially be a loss? Let's sell it before the end of the year, and then you can immediately buy it back if you want to stay in the position, and you're not going to be subject to that wash sale disallowance, basically.
Right.
So that's one very important thing that people can do before the end of the year is kind of take stock of their gains and see if there's any losses that they can take to offset those gains. And then the second thing I would say is just make sure you have some sort of system for tracking the gains and losses. We partner with a company called TaxBit. We're integrated with them and we work with them. There's other tools out there that can help you do that, but make sure you have some sort of system to make sure that you know what the cost basis is of the crypto that you've purchased during the year, and what you've sold. I mean, obviously, if you're doing a lot of using it, there's going to be a ton of transactions, and it can get complicated. And if you just for a lot of people, it just makes sense to work with somebody who can help them figure it out.
Right. And you mentioned comparing it to buying and selling stock. Uh, is it a different schedule, different tax forms or is it really that similar that it just is treated that way by the IRS?
Yeah, it's actually on the same forms. It's on a Schedule D where you show your capital gains and losses. In fact, your capital gains and losses from cryptocurrency would be netted against your capital gains and losses from selling stocks. So it will all be on the same schedule. The more detailed schedules, the Form 8949. So you would have the detailed transactions there, which would flow through to your Schedule D, which kind of is a summary of your short and long-term capital gains and losses for the year.
And I want to point out that I'm not the only one who gets to ask questions. If you do have questions, put them down below in the comments, and Gary will answer them for you. This is a great opportunity. So back to that, being on the same form, do you see that changing in the future? Is the IRS kind of working? Are they working on
I
changes
haven't
to that?
seen. Yeah, for now, I haven't seen much talk of that changing. When it first came out, there were a lot of people that were upset by it because there was sometimes you can't control the fact that it's fluctuating, and people, if you're looking at it as currency, currency is a store of value. The fluctuation, just in between the time you purchase it and use it for something. Some people didn't like that, but I think kind of the industry is gotten accustomed to that, and I haven't seen much talk lately of that changing anytime soon.
And the wash rule, is that something that you think will in future years apply?
Yeah, that very well could be. There are a couple of bills sitting out there, and who knows? There's thousands of pages, and I think nobody's read all of the pages of the proposed bill sitting out there. So who knows? It could be out there. But yeah, I could see the IRS looking at that and say, and that's another good point, Travis, is that the IRS is looking closely at cryptocurrency just because it's so widespread now, and so many people. I don't think there's a lot of people trying to dodge taxes with it. There may have been a small group of people in the very beginning when cryptocurrency was kind of meant to be a privacy thing. But now that it has widespread use, I don't think there's a lot of people trying to dodge taxes necessarily, but they just don't know how to, they don't understand that they're supposed to report it on their taxes. And, it's not like with stocks where you get a 1099 at the end of the year and it says, oh, here's your summarized statement that's required by the IRS, and the IRS is getting a copy. Now, that doesn't mean the IRS is not getting the data, because for those of you who have been following it know that they went to Coinbase and some of the other platforms and said, hey, we want to know the activity that's been going through individual accounts, and pretty quickly the platforms kind of folded under pressure and gave all the information up. So that the IRS is going to get the information, and they've made it very clear that it's a priority going forward. So they're going to be looking at that. That's one of their enforcement priorities for the next upcoming year.
Right. And for someone like me who's not ultra familiar with cryptocurrency, is there a difference between the taxation of buying and selling or mining cryptocurrencies?
Absolutely. So mining is actually a service that's being provided. That's the basically the process of, I'm not a tech guy, so those of you who are watching this that are going to skewer my explanation of how mining works, that's not the point. The point I'm trying to make is, if you're mining for cryptocurrency, which is using computers to solve equations that basically produce the supply of Bitcoin, for example. Um, that is an ordinary income. You're earning income just like if you were, making widgets in a factory somewhere. So any profits that you make from mining would be subject to ordinary income rates. The good news is if you're mining currency, you are paying ordinary income tax rates, but it's a business, so you're able to deduct the expenses. You know, you should probably be operating through a business entity, and potentially an LLC, potentially taxed as an S corp if you're making money. So that's the type of thing that an accountant could help you determine if it's going to save you money to operate through an entity, and most likely it is if you're making money doing it. But yeah, that's so earning money through mining, ordinary income rates, whereas if you're buying and selling, that's capital gains rates, which are lower than the ordinary income rates.
Very good. And I know a place where people could go if they did want to set up that business entity, to run
That's right. Yeah.
their mining through. Um,
Yep.
so again, someone who's not super familiar with crypto, what about staking? Um, where does that, maybe explain that a little bit, and where does that fall in the taxation?
So basically, staking is, and again, I'm not the technical wizard here on this. I'm more of a buyer and seller,
Hmm.
not a tech guy. But the basically staking is for what's called as proof of stake models for cryptocurrency, where basically the owners of the cryptocurrency kind of pledge that currency to stake coins, and it basically verifies transactions. So it basically, in some way, helps out the people that are mining. And so, it's almost like putting cash into the way I think of it, in my layman's terms for myself, so I can understand it. It's like putting cash into a savings account and earning interest, right? I can't use that cash while it's sitting there earning interest. So it's, same with the cryptocurrency. It's pledged. It's earning income. And like interest, it's taxed at ordinary income rates, income tax rates. So if you've staked Bitcoin and let's say you generated, uh, additional Bitcoins by staking it. So let's say you generated, or Ethereum, you generated zero point 0.5 Ethereum, and Ethereum's at $4,000. Then you just had recognized $2,000 of income at ordinary income tax rates.
Very good. Um, for someone who might be considering jumping into this, what sort of benefits is there a use case for a small business owner to implement? What are the benefits of accepting Bitcoin as payment? And is there a difference for that for a small business owner?
Yeah, I mean, as it becomes more, I mean, it's a digital currency, and more people are beginning to use it. I've read a story of, I think it was from our partners at TaxBit when we started working with them, that one of the reasons they got into it was that when one of the founders was working at a previous company, they sent a wire transfer to a different country for that subsidiary's payroll.
Hmm.
Well, I guess he sent it 5 minutes late, and they didn't get it for 48 hours later. And so that's it, and I think in his mind it was like, why in the world does it take 48 hours to just send money from one bank to another? It should all be
Right.
digital. So cryptocurrency solves problems like that. It's instant. Well, not instant, but usually within a couple of minutes at most, the transactions are generally done. So if I initiate a transaction, I can send money to somebody in China or Australia or wherever, almost instantly. So for just in general, as these digital assets get more, or digital currencies get more popular, more people are going to be using them and expecting people to, they're going to be frequenting businesses that accept them, so for small business owners, you may not be there quite yet where you feel like it's worth your while to implement the tools to accept it. But at some point in the future, my best guess is that everybody's going to be accepting these currencies, at least the top two or three currencies in the next few years, just because they're becoming so widespread. And then, if you accepted it, you'd have to recognize the income from the value of that day when you received the cryptocurrency, and it would be ordinary income, just like if you were receiving cash.
Is there a type of business that might be more, you might recommend jumping on it sooner? Are there any, the groups of people who are using Bitcoin on their for transactions on a daily basis? Is there a
Yeah, as you can imagine, most of the people now that the IT, there's all sorts of people that are into it, and they understand the use cases for it, and they understand the benefits of it. So a lot of IT people. So if you're providing services or goods to IT consultants, they may really appreciate the opportunity to pay in cryptocurrency. There's off the top of my head, I don't know. It just kind of depends if I would say if your customer base skews a little bit younger, on average, younger people are the ones that are kind of implementing or using cryptocurrency more often. So that might be a consideration as well.
Excellent. Not to get too far ahead of ourselves, but you mentioned cryptocurrency is similar to taxation for stocks. What about NFTs? And like I said, I don't want to give away too much because this is our topic for next Wednesday. But do
Yeah.
NFTs also fall in there?
Yeah. So NFTs are interesting. I mean, and people who have seen them in the news, I mean, they've really exploded this year. Starting in February, March of this year, there was a crypto artist that sold a painting through one of the auction houses, or an NFT work through one of the auction houses for, I think it was $69 million. And I think that made people say, wait, what? People are selling JPEGs for tens of millions of dollars. What is this? And so basically,
the first tweet that was ever sent was sold. Yeah.
Yeah, right.
Yeah.
It's crazy, and it's not. I've purchased NFTs this year and gone through the process. I feel like I understand them fairly well, and like you said, we're going to talk about them next week. But an NFT is a non-fungible token. What is non-fungible? A fungible asset is something that is not unique, that looks alike. So, for example, dollar bills are fungible items. They all look alike. They are all the same. Even digital currency, Bitcoins are all the same. One Bitcoin is always worth the same amount of value. Right. Non-fungible means they're unique and they have different values based on what they are. It could be artwork. It could be videos. It could be anything that somebody wants to tokenize and record on a blockchain. And so, again, we'll get into more of the details next week. I like the art. It's really interesting, and because it takes a medium that's traditionally, you're looking at a painting, it's still. With art, it's a new medium. You can have motion and sounds and all sorts of things. And so for a lot of people, especially people in the crypto world, they really find this attractive and they like it a lot. And we can talk about the pros and cons of NFTs next week, but that's what it is. And that's a general idea. And basically NFTs, the idea is that, they're obviously not mentioned in the tax code anywhere because they're brand new. But they're most likely going to be categorized as collectibles. Now, collectibles are taxed to capital gain rates, but they're at special capital gains rates. Why is that? Because, traditionally, most of the people who collected art were higher income people, and it was a way for people, if I'm a multimillionaire or billionaire and I'm collecting art and selling it, Congress didn't want those people to be able to get off with 15 or 20%. And so the top rate for collectibles capital gain rates for long term is 28%. For short-term capital gains, it's the same as anything. It's just that same ordinary income rates. So if you hold, and that's a good point to make. I'm not sure if I made it earlier. If you hold Bitcoin for less than a year, that short-term capital gains rate is the same as your ordinary income rate. So
Right.
that's another thing to consider if you're at the end of the year. If I sell it now and I'm in a 35% tax bracket, should I wait another month if that's going to click me over to the year and get me into the 15 or 20% preferential capital gains rate? So that's another thing that people should be evaluating at the end of the year. Obviously, if you're using our service, you can talk to our accountants and they can help you figure that out. But that should give you some sense of it. But yeah, NFTs are really interesting because they're considered collectibles, or at least by the definition that the IRS has of collectibles, that looks like they would fit into that bracket.
Okay. Yeah, we'll definitely dig into that again next Wednesday, same time, same place. Um, One more quick question back on the crypto. You mentioned the short term aspect of it, the holdings. Could it be compared similarly to, say, like a savings bond or a CD or something like that when you buy Bitcoin and just keep it in an account?
Yeah, so, I mean, some people use it that way. I mean, it
Hmm.
depends on what you're looking to do. I mean, some people use it to diversify their assets. They see that the value is going up, and they just want to use it kind of as a bank account. But if you stake it, then it is kind of like a bank account, because not only are you getting the increase in value over time, but you're also getting interest, quote
Right.
unquote, by generating more of the crypto by pledging it, to help with the mining aspect. So you could look at it that way, or you could look at it as an asset that you use, currency that you use regularly to buy and sell
Right.
goods and services.
Is there ever a situation where someone could actually be taxed twice on, they bring home their paycheck in dollars and then they put it in an account as Bitcoin and use it later? Is there a gray area where they might be taxed twice?
You should not, but there's definitely been cases when I've seen things like that happen, when people don't really understand the accounting and taxation side of it. So if you're not sure, you're almost certainly going to save money by having an accountant help you out with
Right.
with some of this stuff. And I tell people that all the time. It's like, you know our services do cost money, but in the vast majority of cases, we help save people more money than the services cost. Not to mention
Right.
the services are tax deductible as well. So, for me, anytime I have a friend or family member, oh, I feel like I've had this conversation 2 or 3 times this year. It's like, oh, I've always done my return myself, but it's just getting so complicated. And then I'll start talking about their situation, and they've done something messed up, and it's like you literally have lost out on thousands of dollars in some cases because you
Right.
just weren't sure how you were supposed to do something,
Right.
it's like you should, I'm not paying I'm not going to try to sew up my arm if I cut myself. I'm going to get a doctor to do it. I probably could do it myself, but
Right.
I'm going to have an expert do it because I don't want to, mess up. Same
Right.
same goes for this. In general, an accountant's going to help you save money.
Yeah. And there's one great aspect of the 1-800 accountant services is once you're working with us, you can call us with as many questions as you have throughout the month, throughout the year, as new situations arise. Maybe you're investigating dipping into cryptocurrency or NFTs. You can reach out to us, and we're not going to send you a bill for that conversation. You're paying a flat fee every month, annually, and it really is a great value for people who don't want to spend most of their day tracking their taxes and their income and their accounting and their bookkeeping. We can keep them doing the aspect of their small business that they love. You didn't open a bakery so that you could do taxes and bookkeeping and payroll. You opened a bakery because you want to bake. So let us handle those backroom tasks.
Yeah, Travis,
So
one more point on
yeah,
that I didn't make is that we have many accountants on staff that specialize in cryptocurrency. So to go to your point,
Yeah.
A lot of accountants don't even know how to handle some of this stuff. I mean, they probably get the concepts, but in practice, they've never used some of the tools to gather the information that you need and things like that. We have many accountants that have done just hundreds of tax returns for people with cryptocurrency issues.
Right.
So, I think that's one of the advantages that we have, is that we have the scale of being able to have so many people, so that we do have people that specialize in just about any industry you can imagine, including cryptocurrency.
That's awesome. Gary, I want to thank you for your time today, and I'm going to thank you in advance for the next couple of weeks. And I want to invite people, if they have any questions, follow-up questions, you can ask them here in the comments. Perhaps we'll address them next week. If you have any advanced questions on NFTs that you'd like us to address next week.